Hello and welcome to the Stock Planner channel. Do you want to make some money? Well, I've got an indicator that works in all kinds of markets, trending markets and oscillating or swinging markets. And it's one that nearly everybody has in their toolkit. It's called the MACD. So if you really want to make some money, you need to learn your indicators, and this was one that you should learn. The MACD indicator works in all types of markets. Let's get started. Today I'm going to tell you what the MACD indicator is. I'm going to tell you about a special indicator, and then I'm going to show you how to use it to make some money. You won't want to miss this. This is Tradingview. It's a free software package, a charting package out there. It lets you do a lot of things, but it allows you to do, in the free version, 3 indicators. This is 4. This is my zigzag indicator, and we're swing traders. We're trying to catch these peaks and valleys and peaks. And if you could do that, pick and find the indicators that predict that valley or peak and can get in, you'd make a lot of money. If you would have predicted this successfully, you would have made a lot of money, and this one successfully, you would have made a lot of money. This is a European ETF. Another indicator that I use is the MACD, and here's a little red dot which says sell. My rule is if the little red dot, which is a crossover, MACD crossover, is above the 0 line, you can take that trade. With reason, some other indicators, I use the other indicators to kind of validate too, but if you had taken that trade, that would have been a good ride down. Here's a green dot, and it's below the 0 line, which tells you to go ahead and take a buy. And if you had done that, say you got in late, that would have been a nice ride up there. Green dot here, that'd be a short little ride. You'd have to set your stops, losses and stuff, but that would have been a ride as well. Likewise, here's a red dot above the 0 line, and that might have been a loser. Remember, indicators are nothing more than just a bunch of lines, some history, past history. The MACD is a bunch of EMA lines, exponential moving averages, and divergence between 2 lines. Nothing really can predict the future of the stock market. The market will do what it wants to do. But if you have a history of reliability, this and that, three good sizable wins and possibly a loss here, that's 75%. I'll take those odds every day of the week. The other indicators I use is stochastic RSI, and that's a crossover here. It's indicating that it's going to go up maybe. And this is RSI. It crossed over below and come back around, and that's indicated to go up. We're not talking about that today. We're talking probably about the MACD, which is a good all-around indicator. We'll go ahead and set this up in just a minute. Looking at Investopedia, the MACD is a trend following momentum indicator. In other words, it shows the trend up or down, and it oscillates back and forth around the 0 line. Usually calculated by a 26 and a 12 period moving average, and then it uses a 9-day EMA of the MACD as a single line. So when this crosses over, you can take a trade. The 9 EMA is the single line. This is your traditional MACD, and you have your distance lines, and normally the divergence, the calculated histogram, when it goes above the 0 line like this right here, you can take a trade. Let's see, you can take a trade there, and that would have got you in, and you could have took a trade here, and that would have got you in, and took a trade above the 0 line, a green little histogram would have gotten you in, and you could have ride those up. Likewise, when it goes below the 0 line, that would have gotten you in a short, and that would have been a winner. Not much of a winner here, so that's a loser. Loser there, so you can put you in about right here. You wouldn't have took that, but too close to this, and maybe here. You're playing around with it around the $10. And this is the regular MACD, and you got your MACD and the 9 period. And when they cross over, it can go up or down. These are single lines. See, they cross over here, and the histogram goes down. You really don't need the histogram if you don't want to. This is the 0 lag MACD. Now look, it goes green here, which is about 2 or 3 days before it goes green here. See it? Here, you would have got in with the regular MACD, and here, you would have got in with the 0 lag. Likewise, a short here, could have got in right there, versus the MACD, which is about 5 days later. So you can see the 0 lag is a little bit quicker. How does it do it? Well, they took a lag out of the MACD. But how they do that is it's calculated pretty much the same, except for it weights the more current values, price values, more heavier than the later ones, and it gives a greater weight. And the theory is it takes the lag out of it, because the more recent prices are the ones that have the most basis. You know, a 26-day and a 12-day, that's pretty slow. But if you waited the last few days a little heavier than the back end, you'll take the lag out. It's really kind of interesting how they do it. It's just math, though. So I use the zero lag MACD. So I'm going to get rid of the MACD regular, but I want to use the zero lag. This is a chart that I use every single day. My bread and butter. There's the double zigzag. That's this one here. There's the stochastic RSI. That's this one here. And the relative strength, the RSI, is here. And this is the zero lag that I use. The zero lag MACD enhanced version 1.2. How to find that is you go up here and type in zero lag MACD enhanced version 1.1. There's a ton of them out there, all in their public library, and all can be used. This is the one they recommend, all available for free. Right here's the one I'm using. And then to set it up, you double click it. There it is. And it comes out of the box with these already set. You don't have to do anything else with it. And you see it's the same settings that you would use for the regular MACD, and that's pretty cool. Nothing's changed here. The only thing I changed here was I left the histogram in for the green because I wanted the zero line, because that zero line is important to me, because I want to be able to make sure it's the distance between the signal and the zero line is pretty deep. I like the deep ones. And then I don't believe I whited it out with the negative, but you can put it in there. There's no reason why you can't. I just prefer to keep the chart simple, and I whited this out as well. It's an extra line. Don't use it. Trying to keep it as uncluttered as possible. That's all. Set it up, and there it is. In researching this video, I came across Forex Watt. I don't know what a watt is, but he has a whole system using the zero lag, and there's some other people do too. And there's the calculation. He lists, and this is what I've said. The zero lag moving average places greater emphasis on the recent prices and less on the older. That's how they take the lag out. It's as simple as that. It's mathematics. Virtually every vendor or broker has a zero lag indicator. It's very common. And this fella, data trader, does a lot of back testing of various different systems. And what he's saying is just what I said, is you get signals from this. This is the RSI right here, and you get a signal much later than the zero lag, as I showed you on my chart. Go ahead and watch his video. It explains it, and he does some back testing. I think it's a valuable tool in your toolbox. I'm going to show you how to make money now, though. Enough of this basics. Let's fly this airplane. Let's get started. And by the way, if you're getting any value out of this video, please like and subscribe. Do that now, because I can really use the help on getting more eyes on my videos. This is ADI. It's a electronic technology semiconductor company. The MACD is well above the zero line. That would have occurred right in here, and you could have took a downward thing. You would have lost money here, but eventually made it back. Now my other indicators are looking like it's pointing up, but we're not talking about those. We're just talking about the MACD. How about this one? It's well below the zero line. It occurred right about here, and that would have been a nice ride up. That'd be a big winner. This one, deep in the money, deep in the MACD hole. Ooh my! Look at that one. Deep. Look at that. This is not so deep. So I don't know. I'm staying away from those, but I would have went to that one, and that would have been a good ride up. This would have been a good ride down, but I don't like them close to the zero line. Notice I didn't take these too close to the zero line. Might have took this one if I was desperate. Let's see how that would have turned out. Well, you would have won a day or two. So you have several winners here, one loser, and I stay away from trades around the zero line. I don't like that one. I don't like these. So does MACD work in a swing environment? I think it does for this. And later on, I will show you these other indicators that do predict this same thing. So if you can get 2 or 3 indicators to do and predict the same thing, it gives you some confidence of your trades. This is a swing and stop. Definitely. There's 2 different kinds. There's going to be stocks that oscillate back and forth, and the ones that are going to trend. The MACD, I say, works good in both types of conditions. Let's take a look at another one. This is a mining stock. It's very erratic. And if you could, the job of a swing trader is to predict these swings. Man, if I could predict that one down and that one there, I'd have me a brand new car. Maybe I'll get a brand new car by the end of this video. There's that one, and there is the MACD above the zero line. Not deep though. This is one that's a little deeper, and that predicted that one, and that predicted that one. So this is win, win. This would have been a win but I don't like to take the greens above the zero line, so I would not take that one. But that would have been a win. There's a green there, and that would have predicted. Look, that's all you need. You wouldn't take this red one because it's below the zero line. You might have took the green one because it's below the zero line, and you would have won a little while, and then you would eventually, had to be quick on that one. About 2%. MACD works on a volatile stock. Is this swinging? I think it is swinging. This is swinging stock. Remember, we're swing traders. We like swinging stocks. This is American Tower. It's hard to predict these EV stocks and the 5G stocks. This is a 5G stock, Internet of Things type thing. And they'll do good this decade. Again, the job of a swing trader is to predict these swings. Now, this is the zigzag, and it's not an indicator. It's a perfect indicator because it looks to the future before it draws this line. You can't do that. So yeah, we can't trade the zigzag. We have to use other indicators that give signals. But the zigzag waits and looks to the future. It's not an indicator. It's a visual indicator for me, and helps me just kind of find and try to do some back testing, visual back testing, stuff like that. But right now, the zigzag doesn't know what it's doing, and it's probably going to be a downward trend. And the MACD says it is. It said it is about there. Maybe you're winning, maybe you're not. MACD here, I would have predicted that. That's a beautiful one. And there is a deep in the money, MACD. That would have been a loser. Here's one, and that would have been a winner. So you have a loser and maybe 3 winners. 75%. Is that good enough for you? American Tower is tough. That's a tough stock to predict. This 5G stocks are very whimsical. Is this a swinging stock? You bet it is. And there's our MACD to predict that. MACD to predict that. To predict that small one and predict that one. That's 4 in a row. There's AMD, which is another chip maker. A big one. Swinging stock. Broadcom. Got one there. Got one there. And got one there. That's good there. These are X's, so we'll not take them. Not them. And not this one. This is a downward slide, so you'd be careful with that. I wouldn't take this one, and that's an up. So the MACD does give you a good indication, not foolproof though. About 75% of the time it's a right, and about 25% of the time it's wrong. But it definitely can predict these major swings. If you can get in and stay in, that's a trick. To stay in, you can make some money. Repeat though, the zigzag is a visual. It just shows you where you want to find indicators that predict this switch. But the zigzag does not predict. It looks to the future to determine this. And this line could be printed maybe 5-6 days later. So when the zigzag knows what it's doing. Right now, this zigzag here does not know what it's doing. It's open. It thinks it's going to go up. Right now, it's going to go up. Right now, it's printing down, and it thinks it might go up. So it waits. It waits to get a few more bars to decide what to do. It's always perfect. It never puts a line, never draw the line until it's perfect. And we don't have that ability. We have to use the indicators. This is a financial stock. Is it swinging? No, it's not swinging. This is trending. And trending, not swinging. Does the MACD do anything like that? The problem with my other indicators, the RSI and the stochastic, it does not do good with a trending market. So we have to rely on the MACD. We're in a trending market here. That would have got you in. If you could stay in here, would have gotten you in, got you in. Now, on a trending market, it's a little different. You could take a signal. If you have a trending market, you could take a signal near the zero line. It's different than trying to predict the switches. In this case, you're trying to predict the extremes. In this case, you're just trying to get in, add more to your position, or get in again after you sold out too quick. Yes. And then this is, so for it works for trending. Is this a swinging stock? No. We're swingers though. So do we forget it or do we start to use it and get in? Well, I'm not trying to leave some money on the table. Look, if I got down in here, I could have rode that thing way, way, way up. And here's the good old MACD again. My goodness. There it is again. My goodness. You got to get in again or add it more. This is a long trend, so you could have got in here and here. And those would have added more to your position here and here. Last stock, swinging or trending? It's trending. Are we interested as a swing trader? Heck yeah. MACD, got you in, got you in, got you in. That is a, there, it could have been a short win, but probably a loss if you took it. If you're smart enough, you wouldn't have took a short while it's trending, a long-term trending. If you didn't recognize, it's hard to recognize, by the way. Now, this is the last stock today, but this is how I really use it. The MACD is well below the 0. I like it. The zigzag does not know what it's doing. In other words, it's not printing. If the zigzag doesn't know what it's doing, it was down, so that means it might be thinking about going up. Now, we didn't talk about these other indicators. It's stochastic RSI. When it's below the 20 and comes back around, that's a sign that goes up. Stochastic RSI, it's one of the indicators. And this is the RSI. When it's below the 30 and comes back around, that's a good indication it's going up. So all three indicators are pointing up. And the zigzag doesn't know what it's doing. So is today a buy? It's got 47 cents since the market opened. This is in the afternoon. So I would take this trade on a technical basis. That's how I use the MACD. I use the MACD in trending markets and in oscillating swinging markets, and I use it in conjunction with other indicators. And when I get this kind of situation with all of them occur 2 or 3 days apart from each other, it gives me confidence that maybe something's actually happening. Maybe the trend is changing. That's what we're trying to predict. We're trying to predict trend changing. It occurred there as well. It occurred there as well, 2 or 3 days apart. Okay? And it's occurring now again here. Is it predicting this major swing change? I don't know, but it looks like it's going to. Well, that's how I use the MACD in the zero lag MACD. And it's just one of the indicators that it's made me some money. It's one that I've started out with early in my career, and it's one I still use today. And it's one that a lot of people use. I hope you consider using the zero lag MACD. I hope you consider using Tradingview. I really do think it'll put money in your pocket. Everybody must learn to trade their own way using their own indicators. I think you can find good stocks to trade using Tradingview and their free scanner. Developing a watch list that you know and love. I believe you can use their hundreds and thousands of free indicators that people wrote and shared. It's ready for you to use, and it's very cheap. Even if you use the paid version, it's about $100 and $120 a year. Look for a discount. Do your own due diligence, though. Don't take my advice. Don't use my system. Develop your own. Please like and subscribe. Fly your own plane. This looks like a kiddie ride, though. Happy trading. Don't take yourselves too seriously. And let's make some money. Use the MACD zero lag indicator for success. I hope I said like and subscribe because I really could use some eyes on my video. Thank you.